It's a younger company than Uber, but it's a pure play. Is the market going to reward that?
Absolutely. It will. It's a much easier story to tell, Lyft is. So I think they will reward that. It's very focused. There's a path to profitability is much shorter and much more defined. So I think Uber is great, but it has a lot of moving parts. So I think that story is going to take some while to settle. So I think people are going to wait. They will be rewarded in the end. Size matters in the long run, but in the near term, I think pure play is what matters.
I don't know how big the IPO window is going to be. There are some skeptical people watching this program right now that think it's pretty small. That's why they're all rushing to come public. Let's put that to one side and just ask the basic question. Why is it an advantage to be the first mover, the first one out the gate?
Well, I think you get to define the market, essentially, because no one's come out. There hasn't been any public ride-hailing company so far. So I think they can come out and really define the market, give out some metrics. So I think Uber can shape their report after that. But right now, I think that's an advantage to come out ahead, and they have a good story to tell. So I think they will be rewarded.
Santosh, something I've been thinking about, and I know you have been as well, when the floodgates open and companies start to come to market all at once, how difficult is it, just technically speaking, the process to bring these companies public from the banker's perspective?
I think that's a big challenge to have, big problem to have, but a good problem to have. I think there will be some kind of rationing, I'm sure. The bankers have to manage all the demand and supply. So they will manage that. I think all these stories are good. They're riding a secular wave. They're not the one-off companies looking for a one-day pop. They're long-term stories. They're playing the long game. So I think the bankers will position them well. We have to make sure that they don't overprice it. They need to price it correctly. So there's a challenge for the bankers, a good challenge to have, but they need to get it right.
Many years ago, when people used to talk about bubbles, increasingly they do even more so now, but there used to be a focus on bubbles in the private market versus the public market. Are you confident that some of these valuations that have been realised in private markets will ultimately be realised in public markets?
I think so. I believe so.
What gives you the confidence, Santosh?
Well, I think we're looking at the numbers. The revenue growth is robust. The market is big. There's still the beginning. I mean, especially the ride-hailing market. They just scratched the surface. It's a long runway ahead. So they are really beginning. And the valuations that you see on the books were really last year's valuation. They've grown on a year. So you'll see some upside to what the last private round was. But overall, I think the market is big. It's still early innings in this app economy that we are in. Yeah. So I think you'll see good growth.
The criticism of some of these companies, and I won't pick up on one right now, has been that they've grown in some kind of arrogance through the private market investment phase because they've been able to attract capital so easily. And they bring that arrogance to public markets. And basically it manifests itself in shareholder voting rights, that they can hold, say, 10% of the company, but have all the voting rights, the majority of the voting rights, the near majority of the voting rights. Is that going to be an issue for some of these companies?
Absolutely. It will be. I mean, we've seen some not so good stories with the Snap and other places where the cap structure, the corporate governance issue is a big one.
Do we get pushback this time round?
Hopefully the bankers have understood, the companies have understood, though Lyft has said that they will keep that unfavorable voting, disproportionate voting in their favor. But we'll see how they manage that. It's not a good idea. Corporate governance is big. The market wants good corporate governance. So I think they will take some discount for that. So, but overall, hopefully they will get it right in the long run. The market has no appetite for any corporate governance misuse.